Hey, in this video, we're going to talk about how to identify different account types, and we're going to go over some accounts that are typically traps. And what I mean by that is some accounts that people typically get stuck on. So we're going to go over some basic rules, and then we're going to go over some of those traps. So I've got 10 account names here that we are going to work with. We're going to categorize these under our 5 account types. Remember, our 5 account types are revenue, expenses, assets, liabilities, and equity. Okay, so we're going to go through these 5 types. All right, so the first account that I have is fees earned. Okay, fees earned. So if you think about the word earned, okay, I like this word earned here. Earned makes me think I have income, right? I'm earning income. So another word for income is revenue. Okay, so fees earned is a revenue account. So look for that earned, but as you're going to see later on, you know, there are some accounts that sound like revenue, but they're not. Okay, so we got to be careful. All right, so now what about this one? Accounts receivable. So anytime you see receivable, it means the company is going to receive something. So you're going to see notes receivable, accounts receivable. So what does that mean? That means I have accounts that I'm going to receive. Accounts receivable, if you don't know, this is money that your customers owe you, right? That means that we will, if customers owe us money, that means that we're going to receive money in the future, right? And so some people get confused and like, oh, that's revenue because I did work. That's why I'm receiving the money. But the revenue is recorded separately, right? This is the actual like balance that our customers owe us on paper. So because we have the right to collect this, we can sell this to other people. This is an asset, okay? So anytime you see the term receivable, a receivable is an asset, okay? All right, now what about marketing expense? Okay, so telltale sign, 99% of the time when you see the word expense, it is an expense, okay? We will go over the one instance where you see the word expense and it's not an expense, okay? But 99% of the time, if you see the word expense, it's going to be an expense. Okay, let's look at accounts payable. So now a lot of people get confused between accounts receivable and accounts payable, okay? So pay attention to the second word. So with a receivable, I'm going to receive something. With a payable, I'm going to pay something, right? So if I have accounts that I have to pay, that sounds a lot like an obligation to me, right? And we said in a prior video that anytime I have an obligation, I have a liability. Okay, so anytime you see payable, so notes payable, taxes payable, lots of different payables that you're going to see, payables are liabilities. Okay, inventory. Now, this is one of the accounts that people get hung up on because they say, okay, inventory is something that we sell to make money, and so inventory is an expense. No, but think about when it's inventory, okay, when we sell it, it's called cost of goods sold. But when we have it in our storeroom, right, we have it in our back room, it's inventory. And at that point, this is something I own that I can sell. And because it's something I own, it's not an expense, it's an asset. Okay? So that's one of those that people sometimes get stuck up on. Inventory is stuff that we own that we can sell, but we haven't sold it yet. And since we haven't sold it yet, it's not an expense. Okay? All right, let's look at dividends. So dividends are one of those that, again, people go, oh, dividends, this is something that we pay out to our shareholders. and so therefore this must be an expense. No. Okay, payments to shareholders are not deductible to the corporation. So this is not an expense. Plus it doesn't say dividends expense, it says dividends, right? All right, so dividends, this is where knowing what the accounts are is really, really useful. And if you haven't watched my video where I talk about making the note cards, or you haven't seen my post on Accounting in Focus where I talk about making the note cards, they're really, really handy. And I know it sounds kind of, 20th century to be making note cards, but trust me, some of the most well-respected writers that I know actually use note cards to keep themselves organized. And plus you're going to remember more when you write things down. So dividends are payments to shareholders, right? They are return of capital. Capital should make you think stock, ownership, equity. Okay, so sometimes just knowing what the accounts are and the definitions can really help you get through a lot of these issues. Okay, prepaid expenses. Oh, Kristen, I see the word expenses, so I'm going to put this under the expense category. Okay, but think about this one. Let's go back over here. Prepaid expenses. What does the word prepaid mean? Like, what happens if you prepay your insurance, or you prepay your taxes, or you prepay, let's say you buy a gift card, right? And so I have money, right, with a company, but I haven't used up that value yet. An expense is something I purchase that helps me generate revenue, right? But if it's prepaid, I haven't used it yet, right? So it can't be an expense. But I have this thing, right? I like to think of, I really love to think of prepaid expenses like a gift card. If I have a gift card, what do I have? I essentially have cash that I can only use with one store. And so if that's the case, it's kind of like I have a bank account with that store, right? I have an asset. Okay, so anytime you have a prepaid expense, it means I haven't used it up yet, so it's not an expense. This is that, remember I said that 1%? This is that 1%, okay? All right, so prepaid expenses are assets. Okay, now what about unearned revenue? Oh, I see the word revenue clearly. This must go over here. Oh, but wait, no, it's unearned. Okay, so this says fees earned. So when I earn it, it's revenue. What happens if it's unearned? What is this account? This is one I see people get wrong all the time. In the 10 plus years I've been teaching, I'll tell you this is one that I see all the time. Unearned revenue. So this is revenue I have not earned. How do we generate this? Well, this is payment received for work we have not yet done. This is when knowing the definitions are really, really important, okay? So I haven't done the work yet, but I've gotten paid. Oh, I got paid, so it's an asset. No. Think about this. This is the other account that you use when you have not gotten paid. I'm sorry, when you've gotten paid for work you have not done yet. So, if I have unearned revenue, I have an obligation, right? I have an obligation to either give the money back or do the work. An obligation is a liability. Okay, so unearned revenue, and I know this is one of those tricky ones because you see the word revenue and you want to put it in the revenue column. If it's unearned revenue, that means that you got paid for work you have not yet done, and therefore you have an obligation. Okay, again, this is when the definitions are critically important. Okay, accumulated depreciation. This is another one that people mess up quite often because they say, okay, Accumulated depreciation. Oh, we know that depreciation is what we do to assets to show that the value of the asset is being used up. So that must be an expense. However, I don't see the word expense. Do you see the word expense? I don't see the word expense. Okay. So depreciation expense is an expense account, but this is accumulated depreciation. So again, one of those tricky ones. Accumulated depreciation is all the depreciation that we've taken on our assets over the years. So this gets linked up with our long-term asset accounts. So this might go with your equipment account, with your buildings account. So this is going to be sitting with your long-term assets. Now this is a special kind of asset called a contra asset. Okay, a contra asset has a negative balance when the rest of the assets have a positive balance. Okay, if you're familiar with debits and credits, it's going to have a credit balance when all of the other assets have debit balances. Okay, so hopefully that's a little bit helpful. Again, make sure you know your definitions on these. You know, it's not enough to just know what columns these go in, because, you know, if for some reason you get stuck, knowing the definition is really going to help, because it'll help you think through what's really going on with this account, or when you would use this account, where you would use this account. Okay, that's why it's so important. Okay, so the last one we're going to look at is retained earnings. All right, so I see the word earnings. I have earnings over here. Clearly, this must be revenue, except it's not. Not revenue. Okay. These, again, definitions are important. These are earnings that have been retained by the company. So this is like multi-year earnings that have been kept by the company. Now, when we're talking about revenue, revenue is only for a period with a maximum of a year. So I can't have earnings retained year after year after year and call it revenue. So where does this go? Okay, if earnings are retained, they belong to the shareholders. Asset? No, because it's not the company's. It's the shareholders. So retained earnings are an equity account. Okay, so I hope that this was helpful for you to be able to see some of the accounts that give people trouble. If there are accounts that give you trouble, let me know. Shoot me a comment below if you're watching this on YouTube, you know, or if you're seeing this on social media, put a comment there. Thanks so much. I'll see you soon.